Hey guys, good evening. Tuesday, June 8th, 2021. Just want to go over a few things. I got a lot of people messaging me about how to stay in trades longer and how to spot these trades. I'm going to go over a couple things. We traded this Wish today. I didn't pull a lot off it, but I was in a bunch of other things at the time. We were trading Clove and was watching this Wish here. Was in and out of this pretty quick, but I held some SPY for half the day. But anyway, what I want you to look at is if you notice, come back here and look at a 1 month daily, okay, even a 3 month daily. You had a really big move down. If you go back here, you're looking at January, February. This thing's made a huge move down from 33 bucks all the way to $8, right? So 780s. But what I'm noticing is you want to notice spots for reversals. So when you're following these reversals like this here, what you want to look at is areas of support and resistance. So there's an area right here of support and then it bounced. Another one here and it bounced. Now this turned into, as soon as it broke down here, it turned into resistance. So if you're looking at these spots, you're looking at them and you're getting, a 5-10 point move on some of these to the upside and to the downside. This one here, what's interesting about this on Wish is this is the bottom. Okay, we're trying to look for the bottom. I thought there was a bottom here and it bounced. Thought there was one here and it bounced. Thought one here and it bounced. But look what happened when you see how it didn't spend that much time here or here or here. Well, look at this one. So you got about 10-12 days here of your bottom. You got a bottom here. You consolidated. You came down again. Tested, 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 tested. Okay, but what I want you to look at, watch this. I want you to look at this bottom for 2 weeks. And then I want you to look at this. So what you have here, basically from this bottom, you have a positive divergence and then an explosion. Okay, this isn't real straight. But you have a positive divergence. So I noticed this without even having to put the indicator on there. I don't use indicators, you guys know. I put this on there for you guys to see. You have momentum building while the stock is coming down. Okay? Your stock has lower highs, but you have a higher momentum. So if I take this off here and you look, we already know what happened there. But now before this took off today, if you go back here, and I always say here's the volume point of control. Here's your VPOC. You want to see a break above the VPOC, okay, volume point of control, which is about 850 area, 860, okay. And then when I say the profile is thin, here's where it's thin. There's a gap to fill, which is here. Just means there was no trading there. The more you scroll in and out, the difference the more it changes. But what I look at is where it broke down. It failed here, and then it started to just really downtrend here and fell off a cliff, right? Well, if you're looking at here where the crossover happened, this is the area of what I'm looking at without even looking at the chart. Now look, it's no coincidence that's where we're at, right? So this looks like it'll gap up to me and continue with the volume profile being thin tomorrow. You see how thin, even if I scroll out, look how thin this is. So the next area for me to look at is like right here. Let me do it this way. This is the next area what I would like to see to pass. So you came here, you tested, you bounced. You came here, you tested, you bounced. Then you failed it. You came down here and you failed it here. So this support became resistance. As you came up and tested, you always want to test and see a failure. So you failed here, and then it just failed hard. Went sideways, we have positive divergence, and you get an explosion. You get range contraction leads to range expansion, right? We didn't know it was going to run this big, but I just want you to train your eyes to see that. Now everybody's asking me how you stay in this trade. How you stay in this trade is just like this. Here's your 30-minute chart, right? The rule of thumb is these moving averages and the candles not closing below the previous candle. So this one here, they all closed above each other. You do get an inside bar here and a continuation. It just barely pierced here, but you get a continuation. Stop is here, 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 here. You go inside. Actually, this is an inside bar. You get another inside bar. Your stop is here, 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 and here. And you can sell, if you took a 5 or a 10 lot or a 4 lot or a 6 lot or an 8 lot, sold half of this along the way, you made really good money today, and then you can swing the other half. So, or you can hold the whole thing on a chart like this, on a setup like this. You can hold this overnight if you want, but I usually like to take, just in case something crazy happens in the market and this thing gaps down, this looks like a really, really nice setup, and then the profile is really thin. The way I see this profile here, this thing has no resistance to go back up here. So, it could hover around 12, 14, 15 and just explode in the morning again. This thing might have, a big move tomorrow. So it's just one way I look at them. The other one is Clove. So Clove is here. If I'm looking at Clove, everybody said, oh, where do you get in at Clove? Where do you get in at Clove? Well, I'm looking at this area here. You got a bottom over here. You got another one here. So this was back in March. You got another bottom here. You get a couple inside days here. I like to see the moving averages cross. You get an inside bar here with a break to the upside. You get another inside bar here. So if you miss this one here and you didn't want to hold, or you didn't hold through here, or you didn't take the trade, you get another inside bar here. Your inside bar break is right here. Here's your entry. Our entry is 956. You get a huge move. Here's the close of the previous day, and then you get a giant day today. So if you're, again, you're looking at this like the last chart we just looked at. Look at where your resistance is. That's where we stopped. Same chart as Wish on an old resistance area. And then you had a nice gap over, probably move after hours, and then a nice move pre-market. So you're looking at these areas for references, just like here is here. You're looking at these areas. So it's no coincidence that you had support here, and look at you come back here, and that's your area of a breakout. You came up here, you tested and failed. You tested, you came back into value here, and you get under the volume point of control. You get an inside bar and an explosion there. It's no there's no rocket science to it. It's just kind of common sense looking at these areas and levels. Now, how you stay in this trade? Here's how you stay in the trade. You get in here, inside bar here, or here, or here. Here's your inside bar break. If you wanted to stay in this trade, here's your inside bar. Here's your entry. You got no wicks and no wicks. This thing opens 50% into this candle, and you have no wicks, and you have no crossovers on any of these. You even on this inside bar, you're starting to spread apart on the moving averages. Okay, let me get rid of that. On this inside bar, your moving averages are starting to spread apart. That's what you need. That's what you want, and that's how you stay in a trade. If you look at GameStop. GameStop, we were along a couple weeks ago back here, or like 10, 12 days ago. I was looking at this area. Okay, I've had this drawn for a while now. Okay, so GameStop back here had an entry of 174. Here's your inside bar break. Now you go here, 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 and you fail. You get stopped out here. This was a huge day. This was like a $30 day. So you going from 175 all the way to 260. You get a $90 move in 1, 2, 3, 4, 5 days. $90 move. So what? You get stopped out here. You get another chance to go here. Inside bar break long. You get another $30 move here. 250 to 292. Okay. You get stopped out this day. If you're going to get a $30 move, you might be taking profit. Now, here's what happens again. You get another inside bar. You get another inside bar right here. Here's your entry. You get a really nice day. You're going from 260 all the way to 280. Okay, you get a $20 move here. And you swing this, you sell half and you swing the rest overnight. The rest is for free. So I can guarantee you on a 2, 4, 6, 8, or 10 lot, if you sell half up into here, into this strength, I can guarantee you that you're paying for the rest of the ride for free. If you're buying at $4 and you're selling them for $8, then the other half are for free. So you get a free ride. You want to stay in this trade? Here's your inside bar break. Okay. You come over here. The rule is bottom of each candle is your stop. Previous day, previous day, previous day. You go inside here. Previous day, inside here. This is actually a double inside. Previous day, close 50% inside this body. You don't get stopped out. Now here's a trick too. When you are trading this style, you have to be aware of these consolidation areas and these pushes. So you want to sell in these pushes. You get a huge move here and a huge move here. So when you're consolidating, you don't want to sell. Your moving averages didn't touch each other. Your moving averages, even though you had a red day here, did not touch each other. You want to sell. You don't want to sell here. You want to sell into the push, just like CLNE or Wish. You want to sell into those pushes. So we had several hitting the scanners today. We had CLNE hitting. I had Wish hitting. CLNE, same thing. You look at these areas. It's no rocket science how you're looking at this bottom here. You're looking at this consolidation. You guys see me draw my boxes all the time. You saw in that volume profile pictures I put, you get like 10 days of consolidation here. Look at all the volume coming in and look at the divergence. You have the box here. Look at the divergence, right? Somebody's quietly loading this. This is going sideways, and look at, as soon as you get through the zero line, you get an inside bar here, you get a little break and an explosion, right? So you got 1, 2, 3, 4 days, even though you had an inside day here. If you trade this style and you want to stay in this trade, here's your contraction, here's your inside bar, here's your break. You stay long. If you go out to another week or two and you want to stay long, here's your stop, your stop, your stop, your stop. So you could even put your stop here. You didn't get stopped out. So you can use that wick. I like using the body. I like when the body opens with no wick. That's indecision, but you did have another huge push. So that's CLNE. Just pay attention to divergences, consolidation, and then with a divergence and expansion. So I mean, your area of like I showed you before, where you broke down, your area where you failed right here is the top of that, pretty much where this thing closed. So you're looking at these target areas, and you're looking at areas of failure. So you had a nice pop here for 5 days, and you failed right here. Well, that's where you came up to. If I push this over, and you come over and look at a different time frame, what you want to do is notice where your volume point of control is. This is a lot of congestion here. So where you have this drawn, okay, now you're going to come into some headwinds on a shorter time frame on the volume profile. You still have some resistance, I call them headwinds, whatever, of trapped longs that are dying to sell. So when you're looking at this, when you scroll out, you are starting to stair step over here, but you got to be aware of the trapped longs here. There's a lot of trapped longs that are wanting to sell this here. So when you scroll in and out, it gives you a different reading. When you scroll out here, you still got a little bit of resistance here, but when you scroll out, you're getting to where it gets thinner. So this will be a little bit of congestion. When you get over it, it should go nice. Kind of like we had Facebook. Facebook had that the other day. Facebook had that when you look at the profile, this profile was built out. When you hit this old high, as soon as you hit it, we had a really nice move. As soon as you got over the profile and stair stepped over here. So it got thinner and thinner. If I wasn't looking, the other day I said, watch Facebook over this high, and then we get a really nice move up, another $3-4 rip. So now tomorrow, if we get a nice move up in the markets, Facebook can probably see all-time highs again. This was the move on Facebook. When it's choppy, you don't want to be in this stuff. You can go long here, but when you're chopping around and you're going inside and the two minute is crossing the 4 minute and touching the 6, you don't want to be in this. You want to be out of this trade. When you see this red, you don't mind trading this, but when you turn red like this, you don't want to be up here and then be all the way down here and losing money and hoping that your swing is going to take off again like this, right? This is a trade here. When you see your crossover, a heavy crossover right here, no wicks, no wicks, no wicks, no wicks, no wicks, etc. You go inside. You're either going to go up or down or sideways. As soon as you go sideways, which you did here, then you go down. If you are in back here, you can stomach this. But I don't personally go out that far. If you're going out to a monthly, way out in time, you can handle this. But I don't trade that far out. I usually trade the closest expiration, or at max, my personal style is a week out. So if you're trading long term, you can handle that. Okay? If you're trading long term, you can handle that drawdown, especially if you're in it from back here, back in this area. So basically you had a double bottom here and you bounced off it. You had a higher low on this red candle, but your cluster of your crossover, you would have maybe went long here. You had a 2-day run here. You're going from 305 to 316. You get a $10 move here. Then this day was lower. This day was lower. You get a red day. So you might have got stopped out, but that's why I say take profits the first day. If you get a $10 move, you should take profits. That way, if you get caught in this, you're okay. You do have a higher low here. But if you're looking at this long term, this is what I'm looking at. You're bouncing off this VPOC. You're bouncing off this volume point of control area, and you have a nice move up. If you're going out to a monthly, you got plenty of time. You can handle these down days. This is a daily chart. Okay? It's a daily chart. As soon as you come back here, look at this. You peaked here. You tested here and failed. You tested here and failed. You broke through it. Look, this is resistance. Resistance, you break through it, it becomes support. You break out, support. Now you have a higher low in place here. And your profile is holding this up. Okay? Your profile is holding this up. Make sense? Okay. All right, so let's look at let me look at Ulta Beauty today. Ulta Beauty had an inside bar break to the upside. Ulta Beauty. Here's your inside bar. Here's a daily. Here's your inside bar here. You don't look at the daily on these charts here. You look at the daily on a regular candle for a break. So what you're looking at here, you broke through the 8. Coming in and looking at today. You're saying, oh, where do I get out of this? And you had a huge move here, right? And then a pullback. You had a really nice move here. Well, if you're looking at today, again, you come back here. Here's a 15-minute. If you're trading a 15-minute, you're going to get stopped out in here. 2-4 crossover, you get stopped out right here. If you're coming to a 30-minute, you probably did not get stopped out. This is going 30, 60, 90, 120. You're coming 1, 2, 3, 4, 5 candles, 150 minutes into the day. Okay? You do have an inside bar here with a continuation. You did not get stopped out here. Again, your stop. Stop, 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 stop. You go inside, consolidation, stop, stop, stop. Inside bar, consolidation. You get your crossover right here, you're out right here. Worst case scenario, you get scared out of here, anywhere in this range. Okay? So inside bar break to the upside. And then no crossover pattern. No crossover, stay in this trade. Especially after this big move right here. You break it down to 15. You still would have stayed in this trade quite long. But this would have been enough minutes. This was 1, 2, 3, 4, 5, 6. 6 times 15 minutes. Then you can go up to a 30. No problem. If you go to the hourly, if you go to a 60 minute, this is really clean. You did go inside here at the end of the day with a bunch of selling. So if I'm looking at it this way, I would stay in this trade. I would have sold half. I'd stay in this trade and look for another break of all-time high. All right. The only resistance you got is right here on the profile. Okay. You already broke this. You're already above here. So the only resistance you got is here. Facebook for an all-time high. All right. So SPY. I swung SPY overnight. I did trade SPY today. Here I watched the ticks full time. We really didn't have that much low ticks. 260. This was like 350. This is all like 200 range, 250, 250. We had that spike down today. Had a liquidation break right here. You can see it. Had that liquidation break. I loaded more in here and caught that bounce. So if you're looking at that on the 30, it was real choppy. It wasn't really clean. I caught this move up and I sold. Then it went sideways. But it wasn't real clean. Usually this is going to go inside and go down. It did just rip down and rip back up. So you get some false signals here. You could have caught that move down, caught that bounce up. You get a nice move here, about a $2 or $1.50 move off the bottom because we were pretty negative for a little while. You get 420 all the way to 422.50 or 60 here. So again, with the crossover, you could go long here and get out up here in this area above the moving average. You're not going to catch the top and the bottom usually. Wish is still moving here after hours. Still new highs, 14.29 now, up 84% for the day. Crazy move, right? So let me look at another one. Sun W I was looking at too. So just train your eyes to see these. Here's Sun W. Okay. Here's a monthly. What you're looking at here, you're coming down, you're breaking down, and then you're going sideways right here. You get these clusters where you bounce. You get a down move for a couple weeks, you bounce. You get a downward move for a couple weeks, you bounce. Down move a couple weeks, and then you go sideways. So look for these areas of consolidation, not the ones that come down like this and pierce and bounce and pierce and bounce. You're looking at sideways, consolidation. You're looking to go sideways. What you're looking at here, it's not really, like I said, it's not rocket science. You're bouncing, and then this becomes support. This area that you're bouncing off of becomes support. So you got resistance, and then it comes support. So you see that move. You got your 8 and 21 crossover right here. If you're looking at this trade and you want to take this trade, it's not super clean, but you can get a trade here off on this crossover. You go 848, you go to about 10, and then you're still continuing here. But the whole key with this is the moving averages did not cross. Okay? So when you see this red candle, even though the stop should be at the base of this, at the bottom of this wick, you got to decide if these are crossing or not. If these are not crossing, what I like about this is you are over volume point of control and you have a lot of volume here. So if you're looking at this, you got to make a decision whether you're going to get out or not. What I'm looking at again too is you're looking at this area right here where you bounced. When you come over here, you closed above that area. So personally, I would stay long. If I were in this trade, I would stay long. You come over here, it's not rocket science. Look, came down here, tested, bounced, tested, bounced, tested, bounced, failed. Right now we're breaking through it again. So your next level of high congestion's here, like $13. But shorter term, it's not bad. So that's how I'm looking at it. Just train your eyes to see that. All right. So, all right, that's all. We looked at a bunch of stuff's moving here after hours. These are after hours movers. I got Wish still going. Got Clove still going. Got Lots, WPRT. I took that one trade on where is it? Rito. I got Rito, RETO. If you look at Rito right here, we had this today about 2:30, 3 o'clock. Somebody came in. They bought about 3.5 million shares here. So I bought this after hours up here at 120s. See, maybe for a gap, maybe somebody knows something. I like those kind of trades when there's nothing for days and days, and then all of a sudden somebody buys 3-4 million shares. The other one is AEMD. Was hitting scan. AEMD hitting a bunch. Where'd it go? AEMD after hours. We had a nice move here after hours on AEMD. It did not pull back. I wouldn't chase this one here. It's 7 o'clock now. I would not buy this here. We probably will have a gap up tomorrow on this and have decent volume. You had 7.2 million and there was nothing all day. So this 7.2 million was after hours. I like this kind of trade. Usually I like for a pullback a little bit bigger in the 3 to 325 range and something like this, like a half back, 50% move down, and then a bounce in the morning. So this thing could very well gap up in the morning or start where it finished and then have a nice move up. Maybe again somebody knows something here. So AEMD, those are the kind of trades I look for. BIOC was hitting after hours a little bit, had a little spike but no volume. So I stay away from these. There's only 2,000 shares here. I don't trade this if it, yeah, everybody says, oh, it's up after hours, but there's no volume. What you need to see is like AMED right here. CLNE. CLNE is moving, but at least got a lot of volume coming down a little here. VISL. VISL, it is moving up, but there's no volume. Absolutely no volume here. So those I don't really swing. Sun W, not much volume. There's a couple 10,000 blocks. I don't know. I'd like to see it longer. Have more volume. Here was a good trade the other day. Here's a double inside day and Beyond had that drawn out. Beyond had a move from 147. First day it moved up to 156. You are green again here today. It is not over yesterday's high, but you do have a nice trade set up there. And then again, if you're looking at this, this was a perfect setup back here. So what I'm telling you, here's your area where it failed, right? So this is what you're looking at for a target, and it perfectly over that target. This trade right here, we came sideways. Basically, same thing. I draw my box, right? You got consolidation. You come down. It's not like, you're going tighter, basically into a wedge it looks like here, and then you fail. So you're going sideways, tighter, right? Right here, almost going into a wedge, basically a wedge right here, and then you break down and fail. Well, look where you stop. You come up here, bounce, stop, bounce. But look what happens. Here's what you want to see. You want to see an inside bar. You got an inside bar to the upside. You got another inside bar continuation right here. Well, if you were in this trade, you got super lucky and you nailed it, because what happens here, when you go inside up, and you gap over this, you get a big move. So this was a home run, this trade. Center volume point of control, you're going up into the point of control, and you're ripping through it. So whatever that news was, whatever reason that was really good. And then now look what you're doing. You go into a wedge, you double consolidate, and then you break out again. So this thing can move again. Right here on these highs, there's not a lot of congestion. Look at how thin the profile is. So this thing could, we closed up into here. This profile's thin. If we get a big day tomorrow, you can have another nice run on this. You got some congestion back here, but the profile is thin. It shows you how much was traded for this point of time on the screen. So, and then what you're looking at too with this back here, here's your entry, and then you go to the daily if you want to stay in this trade. Again, here's your stop, 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 stop. You could get out here, but the moving averages did not cross. Here's a big area of breakout where all four were spread apart. You could front run this on a 246 crossover. The blue is a 17. Okay? So if you want to learn how to trade this, you can come join us, follow us, whatever. You can join our Facebook group at Off the Chart Trading, or you can follow us and join our chat room and Slack at offtecharttrading.com. All one word. So I don't know, just trying to help you guys stay in trades longer and see how we spot these things. All right, I'm out of here.